Howdy folks, hope everybody's doing absolutely phenomenal out there as always. Hello chat, hello. Oh boy, we got so much to get into today. It's a busy day. Not as busy as tomorrow's gonna be, but it's busy, okay? A lot to go through, a lot to get into. Let me get everything up and rolling for you guys here. So, let's start going through what's going on here as far as stocks go. So it looks like definitely a bit of a risk on day. It's a weird day though, right? Because we're a little risk on, yet go ahead and take a peek at like the Dow. Dow's down 100 points. And yet we've got the Russell up 1.1%. Very strange trading day here today. Where's the NASDAQ at here? NASDAQ's actually down. But yeah, look at some of these moves in some of these smalls. You know, Fubo's up almost 6% today. The Planet's up almost 6%. Elf on a Shelf's up nearly 5%, which, by the way, Elf's stock's gone up so much it's starting to slowly move into like mid-cap territory and out of small-cap territory, which is interesting, but stock kind of moves like a small-cap still a little bit. One of the few that actually has been doing tremendously well, right? Cheesecake Factory, 4% mover here today. Mattel, 4% mover. Honest, about 2.5%. JWN 2%. Palantir, shout out to the Palantir shareholders. If there's any Palantir shareholders watching this live stream right now, shout out to you guys. Yeah, Palantir continues to be a beast. Foot Locker up here today. Texas Roadhouse having a decent day. You know, if I look at my stocks overall, I got a lot more green than red going on out here today. So it's not going to be the most exciting day in the public account, though. And the reason being is Meta and Tesla are huge weights in there, and those stocks are hardly moving, right? Let's go ahead and take a peek at big tech. Somebody says, woo, Palantir. Yeah, it's a good day. Oh, my gosh, I got to see what's going on with Nvidia. Look at the underperformance day, down over 5%. We're going to take a peek and see what the heck is going on with Nvidia. That's a strange move there. Overall, for big tech, more Red Dead Redemption than green today. A lot of these guys are, man, red, Snow, AMD, Intel, Netflix, Amazon, Apple, Microsoft, Oobity Booba, the Qs in general, Intuit, MU, PayPal, Google McDougal, all red today. I mean, as far as green, you know, not much to be excited about for the green side. Adobe and Shopify is really about it. So, not a lot of green when it comes to big tech, but we're definitely going to take a peek at Nvidia later on and see what the heck is going on there. Thank you everybody that follows. Thank you everybody that's subscribed. I appreciate each and every one of you for being here as always. In regards to AI-related stocks, mixed bag when it comes to AI-related stocks. Palantir is the leader of the bunch here today. But do remember, yesterday, Palantir didn't move. It was a super weird trading day for Palantir. Literally, Palantir was flat yesterday. So do keep that in mind, folks, okay? But Nvidia's getting slapped, nasty style here today. So we will see what exactly is going on there, and I'll share my perspective. WTI is about flat today. We'll take that. With everything going on in the Middle East, if we can just keep oil flat, folks, we'll freaking take it, okay? We will take it, and we will bake it. Oil and gas stocks, a little decent green today. See travel stocks. Travel stocks, a little bit of a mixed bag here today. A little bit of going nowhere. Oh, the slaughterhouse. Let's go to the slaughterhouse, baby. Fintech. Ooh, fintech. Not really a slaughterhouse here today. You know, hey, if fintech can be like that, that's actually a win. Oh, my favorite, safety stocks. Let's see what's going on with the safety stocks. Always my favorite to take a peek at. And yeah, safety stocks not doing so well when it comes to a lot of these. Campbell's Soup. You know, some of these year-to-dates are just rough for a lot of these stocks. Apple actually getting hit a little bit here today. Clorox getting hit again. Look at that drop for Clorox. Holy smokes. That's been in a straight line down. I mean, my gosh. Pepsi, General Mills getting hit again. Kraft Heinz. My wife just bought 3 massive bottles of ketchup from Kraft Heinz. I figured that would have saved the day for them. Dollar Tree and Dollar General having a decent bounce back. Those stocks have been absolutely wrecked recently. Wreck-It Ralph. Goldman Sachs down today. We'll have to look at their earnings. Their earnings came out here today. Bank of America was as well. And when it comes to Bank of America, where's B of A? BAC here today. A little bit up. Not much going on there. Let's go back to Adam Peter Parker.
subject to controls and why you're seeing the shares sell off today. Separately, though, I want to bring your attention to shares of VMware. They're lower on a report from a Chinese outlet that Chinese regulators need more time to review Broadcom's acquisition of VMware. And of course, that has some investors spooked. VMware shares are down almost 7%, Broadcom down over 2%, but Broadcom just got back to me, and a spokesperson tells me that they still expect the deal to close October 30th. But what timing, right? Given the restrictions out today?
Absolutely. So only 2 weeks to sort out if that's going to be on track. Christina.
What is this hype train thing? Level 1 hype train. Sub-gift, hype chat, or use bits to get to the next level. I don't know what that's all about. Sounds cool,
like,
though.
you know, it's the entire world except for China is the end market, or is it just kind of friction that we have to work our way through? Did China front load a lot of demand of buying of Nvidia chips, and maybe it's not that big?
That's something the bear case will say about Nvidia. Oh, you know, the Chinese, they're just buying all these AI chips left and right.
Same, which is there's no near-term impact, but it might be medium or long-term. But at the end of the day, it's all about time frame. I mean, Nvidia, to me, has the best product in the early phases of a 10 to 15-year trend. So,
good point.
Of course, the stock's going to be worth way more in, 2 or 3 and 5 years. Whether there was a surge through, I mean, everyone I know wants the thing to go down 20% so they can buy some. Right, so it's never going to.
That's a good point.
Right, that's what I.
That's a good
close
point.
To 18% actually.
Yeah, right. People want to. Yeah, I think they reported. Since they reported, the whole Nasdaq sold off too. But like a relative underperformance of its peers.
Yeah,
I think people want to own it. So look, can China produce the same power and speed of chips right now on their own? No. So the question is, is this some sort of political thing, and then they'll have to come back to them later when they need them? We'll see.
Yeah.
So I'm skeptical that Nvidia's product can be substituted by anyone else anytime soon.
Cheryl, I know you've been kind of saying you want to be buying dips in some big tech. Does this qualify with the semis here?
I would say yes. Semiconductors are actually lagging the rest of the technology index as of.
They are indeed. All right, I'm going to get caught up on chat. Shout out to everybody in the chat. Appreciate you guys being here as always. Alrighty, so let's start getting into some news here. I want to find out what's going on with Nvidia. Hold on, let me hear what Peter Parker has to say.
Thanks so much.
Thanks for having us.
Let's
Peter
get
Parker.
to our question of the day. We want to
What is it?
Is this an opportunity to buy Nvidia stock? Head to @CNBC on X to vote on that. We'll share the
same question for you guys in the chat. Is it time to buy Nvidia stock right now? Should you start loading up on that stock? Believing it's going back to $500 or even $600, $700 a share. Is it time to buy Nvidia stock? I want to hear everybody in the chat. Yes or no? Time to buy Nvidia or no? Stay away from Nvidia. Love to hear from you guys. Thank you everybody that's following here. Thank you everybody that's subscribed. I appreciate each and every one of you guys for being here. Before we start getting in the news, I want to see what you guys have to say in regards to Nvidia. Is Nvidia a buy? Is it not a buy? Right now. Right now. Okay, let's see. Woo! Okay, they're coming in. Somebody says, yes, Nvidia's a buy. Yes, Nvidia's a buy. Yes, but for short term, somebody says, okay. Somebody says, yep. Somebody says, holding. Somebody says, no. Somebody says, no, thank you. Somebody says, nah. Somebody says, actually, time to buy Qualcomm. Okay. I might talk about Qualcomm in this video. I'm a shareholder of the company. Somebody says they're not, but they are keeping track of Nvidia stock. Somebody says probably not the time to buy Nvidia. Somebody says I'll take the small dip. Somebody says not for me. Somebody says no. Because this China thing is no joke. Short-term trade. Anything's possible because earnings are going to be good. You should do a poll. Man, I would do a poll if I knew how to do a poll. I'm so new to Twitch. I don't know. I don't even know what the heck the hype train thing was, man. That could have been awesome, but I don't know. I don't know how to do these polls and all this stuff. Somebody says it's a $600 stock, to be honest. Good point. Somebody says, get a Twitch assistant. I might have to. Somebody that just full-time teaches me how to use Twitch. That would be kind of cool. So anyways, let's start getting in here and see what's going on. Oh, I saw this CH and I was like, what? Cheesecake Factory? What's going on Cheesecake Factory? Chesapeake Energy. Dang it. All right, Nvidia. Let's see. What's going on with Nvidia? Thank you everybody that follows. Thank you everybody that subscribed here. China. Nvidia and other semiconductor stocks pair losses amid new China export rules. Nvidia and other semiconductor stocks pared losses on Tuesday amid fresh rules curbing the sale of artificial intelligence-linked chips to China. Didn't that already happen? Shares of Jensen Huang-led Nvidia in midday trading, but they had been down as much as 8% earlier in the session. AMD, Qualcomm, Broadcom, MU, Texas Instruments, On Semiconductor, Microchip are among other semiconductor stocks that rebounded. New restrictions from the U.S. Commerce Department will target NVIDIA's A800 and H800 chips, which were targeted at the Chinese market to comply with previous export controls from the Biden administration. However, the company told Seeking Alpha, specific, that's random, but whatever. However, the company told Seeking Alpha on Tuesday it does not expect a meaningful impact on its financial results in the near term from new curbs. Okay. Min Chi Ku, an analyst at TF International Securities, said the new rules were bad for NVIDIA, and the results could be closely monitored to see if the company can compensate those lost sales. Quote, the new ban undoubtedly negatively impacts NVIDIA. Given the robust demand for AI chips from the Chinese customers, accounting for 15 to 20% of AI chips, shipments in 2024. Ku wrote in a note. The analyst also noted that this makes for a short-term entry opportunity into AMD if shares fall. Okay, so AMD, I guess, is a play. Would that be the play, though? I don't know. Okay, anyways, because it seems like if one of these companies is affected, they'll all be affected, but whatever. Intel stands out to lose because of their new guidelines. Fresh new guidelines. The U.S. unveiled initial restrictions on semiconductors and equipment in October 2022. The new rules require that companies notify the U.S. government before selling certain chips that could be used for artificial intelligence and supercomputing and pose a national security risk, according to a senior administration official. The updated restrictions allow the sale of advanced commercial chips to Chinese companies for use in consumer products such as smartphones, computers, and electric vehicles. The U.S. will also require that companies get a license to sell chips to more than 400 countries, which Chinese companies could use as intermediaries to get around the controls. Interesting. At the end of the day, if the Chinese want to get their hands on those chips, they're going to get their hands on those chips, right? They'll find a way. They'll find a freaking way. There's no doubt about that. But it's all very interesting. I mean, at the end of the day, there's a few ways you could look at this, right? So you could look at this obviously from the standpoint of the U.S. government or the Biden administration, whoever you want to say, in regards to we don't want the Chinese to have very advanced chips. We want, the West to have those chips, right? That's one way you could look at it. The other way you could look at it is, if we're not going to provide those chips, then a lot of Chinese companies might try to make those chips, and then, there's a potential risk of our companies having to compete with their companies, and their companies get into maybe higher levels of, even higher level chips, which is always a potential if there's not a need for you're the one producing it, right? If they don't know how to produce it, they're going to be in a tough place. I don't know, man. There's so many different ways of looking at something like that. I think all directions have to be considered there, right? Let's jump in here.
And we love to look at traffic as part of that. It can't just be by taking price. In fact, it really shouldn't be by taking price. It should be by winning more customers than you had. And if we look at our top names, our top 5 portfolio is Costco, Walmart, Kroger, and then we look for O'Reilly Automotive and Sherwin-Williams to round out the top 5. So to me, those are companies that are winning share, and they're doing it in a way that they can therefore be more profitable and come out of this stronger.
Yeah, and certainly seems as if, it tilts based on your process toward net defensive things like Costco and Walmart. On the other hand, interested in Sherwin-Williams. I mean, is that simply because, stock's down enough? Is it a call on housing activity or something else?
Interesting.
Yeah, Sherwin has been our favorite in the whole home improvement space. So the 3 names we do recommend there are Sherwin, Home Depot, and Tractor Supply.
There's my guy. That's my main man out there, the Amazon delivery man. He just delivers something to Graham's house over there. That's my guy, man. He's a fan of the channel. I appreciate him.
Going through to help good gross margin expansion. The other thing is the category tends to be a little bit more defensive than a lot of other areas of home improvement, so that it's a little less cyclical. So I would say that's why Sherwin is the horse we're riding in that area. O'Reilly is another one that you point out. Yes, it's technically consumer discretionary, but in reality, it acts more like a staple. If you got to keep the cars in the vehicle fleet running and we can't afford the new cars, to us, that's still the share gainer and the winner in the space.
Is there any way to try and handicap both how holiday is going to track from here and, how to play that within the market? They don't always link up, and maybe sometimes we overplay the holiday themes, but how would you approach it?
Look, it's part of our job. So holiday sales tend to, all the normal fundamentals are in play, like what's job growth.
Hey, does anybody know who owns Behr Paints? Is that Sherwin-Williams, or is that owned by Home Depot, or is that some separate company? Behr Paints. B-E-H-R. Thank you.
Maybe grow 3 or 4%, if that would be better. Our forecast is 2.5%, just to be clear. But if we're going to see upside in holiday sales in those bigger ticket consumer discretionary categories, it's usually the wealth effect that gives you that extra little bump.
Sure. And things like, maybe more reliance on credit among some consumer segments, things like that seem like they're starting to maybe fray around the edges of the spending story.
After this gentleman is done, I'm going to get back into the chat. And we'll start chatting in the chat.
Consumer credit market. A lot of that, I think, is consumers' unwillingness to pay the higher rates, but also banks' less willingness to lend, given some of the challenges early in the year, Silicon Valley Bank, et cetera. So I think when you put those two things together, it's really, we're just set up for a slow, steady retail deceleration, not a collapse, again, as long as we have jobs. And so the key is finding those retailers that are gaining share, that are merchandising right, that have more traffic. And that's why those are the ones that we're really into. I think that'll be true this holiday more than ever. And value, I shouldn't ever forget that. With the strong consumer balance sheets being chipped away, retailers that can lean into value are also the ones that are winning.
Yeah, and presumably value is one of the reasons the traffic is up in certain places as well. Greg, appreciate it. Thanks very much for the time.
Let's see what everybody's talking about here. I'm so far behind. Somebody said Winland's under $90. Is it really? Ooh, baby! Somebody says Target is up. It's an opposite day, yeah. What price does Palantir become a hold? Well, technically right now I'm just holding Palantir. But you can make a strong argument that maybe I should be buying Palantir right now. I don't know. A lot of it comes down to risk tolerance. A lot of it also comes down to, how much exposure do you want in a stock, right? These are all things that obviously have to be considered. But damn, I'm so freaking excited about Palantir over this next couple of years, to be honest. Somebody says, nice, KR is my number 3 position. I'll eventually just beat them. Walmart and Amazon is major grocery suppliers. Okay. Bought 250 shares of Fubo this morning at $249, hoping for 5x next couple months. Jeez, you think the stock's going to 5x in the next couple months? Holy smokes. That would be sweet. I'd be a very happy camper if that happened. Holy smokes, man. You're a different level of bullish. Oh, somebody says Home Depot brand in regards to Behr Paints. Is it really? So it says thoughts on Amazon food delivery. I tried it the other day. $50 off your first order of $100. Hey, that's a pretty good deal. Nice. And I think I'm not going back to in-store grocery shopping since it's free delivery with Prime membership and food prices were extremely competitive. Weren't they really? Let me ask you there, Josh. How is the quality? Did you order anything first off that was like produce related, like lettuce or tomatoes or anything like that? Because I'm genuinely curious if the quality of like produce specifically, right, is like good from Amazon. So I'm kind of curious about that. But that's cool. As far as my wife, she, I really never do food shopping unless I'm cooking something specific. Then I go to the food store and get that stuff. But I don't really do the food shop in the house. My wife does, but she always pretty much does the online stuff. Not where it gets delivered to the house, but like where you do the in-store or at the store pickup, and you like call the number and they come load your groceries into the the back of the vehicle. The one downside, I think, with that is you don't get to pick your own produce. And I think that's one of the coolest parts of going to the grocery store is actually doing grocery shopping is you get to pick your own produce because not all vegetables are created equal, okay? Not all fruits are created equal. If you know what you're looking for, like, one tomato can be far better than another tomato, right? 70, a lot of people are saying not sure in Williams as far as owning Bear. Oh, somebody says a subsidiary of Masco. Yep, we did find that out. Thank you. Somebody asked about Ford stock. It doesn't interest me, to be honest. Regarding Palantir, it had to do with adding and subtracting an asset made them hit their EPS by a penny. Okay, interesting. Yeah, not familiar with exactly what they're referring to there. What advice would you give your 22-year-old self knowing what you know now? I mean, gosh, there's probably a lot, but I would say look more into growth investing and get your game going on that as fast as possible. Because I think back then I was just really very focused on value investing and dividend investing. Just say, really study the approach of growth investing, valuations, and trying to figure out if you're getting a good deal on a growth stock faster. Because there's just so many opportunities I missed out on in my early 20s because, I didn't really understand how to value like more growth-related companies, the Amazons and many of those other companies like that, right? Even Tesla, tracked Tesla back in the day, but I never invested in it until it was like 2018, 2019, which my gains in Tesla are phenomenal, but I can just tell you they would have been a lot better if I would have got in that stock many years before that. Somebody says, Josh says, also no delivery fees on Prime Food and same-day delivery. Honestly, I wish there was a way to tip the driver. Oh, that's an interesting concept. But kudos for Amazon for not pressuring people to tip since it's got... Yeah, that is true. It has gotten a little out of hand, no doubt. What do you think fair value for Apple is, and what price would you consider a buy? I think fair price for Apple, given what they're kind of experiencing in their business, I think it's probably in the 125 to 145 range right now. So, I mean, if Apple was under 120, I might be a buyer of the stock, to be honest. Especially if it was under 100, then I would definitely be a buyer. But yeah, that's kind of how I feel in regards to Apple. 125 to 145 is about a fair value for Apple, given what they're experiencing in their business, given their business lines, the stickiness of the business model, and things like that. That's kind of what I see there. In the long term, we're all dead, so focusing on only dividend stocks is not the best for sure. No more than 10% of the portfolio. I mean, there could be a lot of arguments made both ways, right? Dividend stocks are usually, not certainly this year, but usually pretty safe investments for the most part, because usually those businesses are very proven out business models that can get through good economic times, bad economic times, okay economic times. And so those companies usually hold up very well. They're usually stable. You can usually get some, if it's a good quality dividend company, you should be able to get some good capital appreciation over time on top of the dividend yields. And then you can use all that dividend money you collect every 3 months to go and invest in your portfolio and other opportunities, right? And you continue to build that money bigger and bigger. So, this year has been definitely a hated dividend year. I don't think it is always going to be like that. Let's just put it that way. We're kind of in a freak year, kind of the same way people were saying, last year, growth investing's dead, growth investing's dumb. Look at all the money people are losing. And, obviously now this year, everybody wants to be growth investing and the growth stocks and the big techs and all those sorts of things. So I don't know, man, I think the best strategy, from my opinion, is having a well-rounded growth value and dividend strategy. I think that gets you through the tough markets. The public count portfolio has been around for about 6 years now. I had that up to, $1.7 million or so, right? And that's just a portfolio that, if you really look at it from top to bottom, it's gotten through a lot of tough times. And one of the reasons is the diversification of the portfolio. Because I can tell you, that portfolio could have been absolutely wrecked previously. But the overall diversification gets it through so many tough markets, which we've been in. Think about what we faced the last 6 years or so since the public count's been around. I mean, we've gone through the Rona crash. We went through the 2018 bear market at the very end of the year, which was actually very vicious to go through. That was nasty. Not a lot of people, hear about that or talk about that. But believe me, if you were in the market at the end of 2018, there was pain, folks. The amount of big name companies that fell 20, 30, 40% at the end of 2018 was a long list, folks. It went through that market. It went through the Rona crash. It went through this high inflationary environment. It went through some very questionable decisions of mine in 2021. And yet, despite all that, the diversity is what got it through. That's just what got it through, right? Growth, value, dividends. So that's why I always preach growth, value, dividends. I think, you hold a good amount of each of those categories, and you know what you're doing, you know how to value those companies. I think you should be looking pretty good over time. So,
Let's get the results of our question of the day. We asked, is right now an opportunity to buy Nvidia stock? Stock is down at almost 5% today, down 13% from its high. It is close, but most of you did say no, not quite
yet. That is
pretty much neck and neck right there in terms of yes or no. Well, the stock is up a cool 200
on 800. Wow.
Get started today.
And that makes me think that was about what you guys were at, right? Wasn't it about 50-50 in terms of you guys kind of saying it's time to buy and not a time to buy? So, by the way, I'd love to hear from you guys. Is anybody buying or selling Tesla stock going into their earnings? Tesla earnings are tomorrow. Is anybody, which tomorrow's live stream is going to be freaking insane, okay? Tomorrow's live stream is going to be insane. Is anybody buying or selling Tesla stock going into earnings tomorrow? Yeah, tomorrow's going to be absolutely crazy in terms of tomorrow's live stream. Wait to see the chat tomorrow. Holy smokes, it's going to be going nuts. It's going to be a long live stream tomorrow, too, because I'm going to probably listen to a conference call on here, too. It might end up being like a 2.5 or 3 hour live stream. It's going to be a freaking beast. Oh, yeah, looking forward to that live tomorrow. Yeah, it's going to be crazy. Alrighty, guys, so let's get back into... Oh, Fubo's making a little bigger upward move here. All right, so let's see. So if we go past 5 years, obviously September was just incredible for the data overall. Like September was the best ever. So this one shows you month by month over time. So this was September of 2022, which September of 2022 up until that point was the best month in history for Fubo. But we've gone to the moon in September 2023. So we'll see how it all shakes out. But, they got a lot of progress to make really in their income statement on the bottom line, though. So that is something to kind of keep in mind there. Alrighty. Let's see here.
And actually, we're going to go to Phil LeBeau because we've already got our first report out, United.
Ooh, looks like a beat.
United beating the street in the third quarter, I should say. Remember, earnings expectations did come down throughout the quarter, given a number of the cost headwinds that are out there. But United earning $3.65 a share. The street was expecting $3.35 revenue, and this is record quarterly revenue from United Airlines, $14.484 billion, better than expected, which was $14.43 billion. Revenue per seat mile down 2.8% compared to the same quarter last year. Passenger revenue per seat mile down 1%. And then you've got cost per seat mile excluding fuel. That's up 2.6% compared to Q3 of 22, Q3 of last year.
Somebody asked if I'm hedged against Tesla. I will answer that shortly.
$2.95 a gallon, load factor of just over 86%.
Look at the reaction.
Now it's the focus on the Q4 guidance. This is what a lot of people are going to be focused on. We knew that Q3 would be strong, especially Transatlantic and Pacific having record profits from United. EPS of $1.50 to $1.80 a share. The consensus was $2.06. Now I've seen some analysts bringing down their estimates over the last couple of weeks, but this is below expectations. $1.50 to $1.80 with revenue coming in up 9 to 10.5%. Depends on how long the Tel Aviv flights are suspended. That's 2% of United's capacity. If they're suspended all the way through the rest of the quarter, then you're going to see lower revenue from United. Cost per seat mile up 3.5 to 5%. There are those higher costs that we've been talking about for the airlines, with an average fuel cost of $3.38 a gallon. And then for the full year, United is not changing its guidance as of right now. It was 11.
Somebody said, is there anyone else watching this from work? I bet you, we got 200 viewers on right now. I bet you at least 50 of you guys are watching this from work right now. I bet you money. 50 of you guys are watching this from work.
11 to 12.
Number might be higher than that, honestly.
We have seen a number of analysts bringing down their full year earnings guidance. That's the numbers with United. That's the reason you see some pressure there, because of the Q4 guidance coming in below the street consensus. Again, beating the street on the top and the bottom line for the third quarter. Guys, back to you.
Okay, Phil LeBeau, thank you. Shares down 3% right now. Do want to get back to our panel. And Keith, this is actually what I was going to ask you, is how to balance, is how investors should think about the rapid rise we've seen in Treasury yields.
Yeah, that's tough in regards to United's numbers there. Oh, man. By the way, we're going to get into Bank of America and Goldman Sachs earnings in just a moment here. I just want to get back into the chat a little bit because I hate getting so far behind in the chat. So, somebody asked me, do I have any sort of hedge position against Tesla? And the answer to that is, as of 2 hours ago, I do. I am hedged against Tesla for the next 11 months. Unless Tesla was to go down in a massive amount, I'd probably just take my profit and run in regards to that. So I do have a hedge on Tesla, my Esla. So everybody, as somebody asked, if people are watching from work, and a lot of people are like, yeah, I'm watching from work. And believe me, a lot of people won't admit they're watching this live stream from work right now, but I know you guys are. Okay? I know you are. There's definitely a lot of people. Somebody said, do you have many Canadians in your private group? Actually, surprisingly, yes, quite a few. I would say at least 20 to 30 Canadians minimum. There's quite a few. Obviously, most are U.S. We do have some Europeans in there as well, but surprisingly, quite a few Canadians. Somebody says, do you feel bad owning a stock that is such an immoral, evil company like Palantir? That's different. It's an interesting perspective. What do you guys feel? Do you feel like Palantir is a very evil, immoral company? I'd love to hear your guys' perspectives in regards to that. And that's always a, in regards to the subject of owning immoral, evil companies and things like that. Because it is something people have to ask themselves sometimes. I was even thinking about this recently because obviously defense stocks, are going to be in a pretty good position over this next few years. And when I say defense stocks, I'm talking about the guys that make planes, guys that make missiles, all that stuff, right? And even that I was thinking about I hate having to profit from war or potential war or whatever. You guys ever see the original Iron Man movie? It reminds me of some scenes in the original Iron Man movie and whatnot. But anyways, it's never a comfortable feeling, but there's so many companies that, you can make an argument that so many companies are evil and bad. And I know people have tried to make those cases for Meta and companies that advertise and data companies over time. I own a company like Wynn Resorts, which is, it's gambling, it's alcohol. You could make an argument that that's immoral. There's so many places you can take that. That I just don't know. You know what I mean? It's hard to really, if you own a tobacco company, is that a immoral, evil company? Well, smoking, I don't think has really any benefits to it, right? So you say maybe it is. And so I don't know. There's just a lot of places you can take that. And at the end of the day, I just find a lot of times people are maybe a little bit of hypocrites in regards to that, because one moment they'll be like, this company's evil, but then they'll look past this other company that, you could put in the same category. So at the end of the day, you got to ask yourself, I think it's really up for each individual to be like, is that an evil, immoral company? Personally, I don't look at Palantir as an evil or immoral company at all, in my personal opinion. But that's just my opinion. Somebody else might have a different opinion. They might say Palantir is evil, pure evil company. So I don't know, man. Hi, Jeremy. Do you think about Estee Lauder? I've been thinking a lot about Estee Lauder recently, and I want to pull the trigger there. The problem is there's so many opportunities in this market. That's the hardest thing, man. You got so many opportunities in this freaking market right now. Somebody says, let's go Tesla to 120. That would be sweet. That would be sweet. I'd be buying Tesla, believe me, at 120, as I was at the very end of last year and into the beginning of this year. That was an incredible opportunity, but I don't know. I wouldn't get my hopes up too much about that. So, let's see. I hope so in regards to eating crow on Tesla. I hope so. I own over $400,000 worth of Tesla stock. So I freaking hope that happens, right? Oh, hey, before I get more into the chat, before we look at Bank of America and Goldman Sachs earnings, we got to play our game, folks. It's game time. The game time is here. How much was the public account up or down today? And by the way, I think I finally figured out how to put screenshots into the thingy-a-majingy. So Put in your guesses, folks. Get in your guesses. We'll see who's going to be right in regards to this one. How much was a public count up or down today? This shall be interesting. Ooh, I got the number. Okay. Alrighty. This should be interesting. Some of you guys are freaking really close. Really close. Oh boy. Alrighty, guys. I'm going to throw it up on the screen. Here we go. There it is. $14,155 a public count was up here today. So somebody had guessed $14,800. That was a really close guess. Congrats to them. They were the closest out of everybody from what I see. Somebody said 14,000? Well, then that was technically the closest. If somebody said 14,000, so congrats to Muddy. Muddy got that one. Wow. All right, so I want to take a peek here at Bank of America's earnings and see what did they actually report. I don't know if they already have the financials up here on a quarterly basis. Let's see. June quarter, July. Oh, no, that's not the most recent quarter. Let's see, news. Oh, actually, let's go to press releases. Alrighty. Bank of America. What's going on inside Bank of America? Total revenue for Bank of America came in at about $10.4 billion. That's up from 9.9 the same quarter last year, so that's good. Provision for credit losses jumped substantially, $1.4 billion from 738. That's literally pretty much a double up. That's interesting. Non-interest expense up about $200 million roughly on a year-over-year basis. Pre-tax income down slightly. Income tax expense roughly in line. So net income did drop just slightly for Bank of America overall there. And obviously the provision for credit losses was the huge jump, right? Average deposits actually dropped for Bank of America from about $1.07 billion in the same quarter last year to $980 million. Okay. Number of financial centers. Wow, they actually dropped their number of financial centers a little bit. That's interesting. Risk-adjusted margin went from a little over 10% the same quarter last year to 7.7%. Average credit card outstanding balances, 98 versus 85. Okay. Interesting. So yeah, net income was down a bit for the company, it looks like across the board. Global banking actually was in a better spot for the company. And usually all these big banks like JP Morgan and Bank of America, they usually do it based upon product. Like they'll show you an overall number and then they'll show you more into detail in regards to this. So, total net charge-offs of $931 million increased $62 million from Q2 2023. Okay, but how much year over year? Whoa, okay, folks. That's interesting. Net charge-offs of Bank of America, over $930 million in net charge-offs in its most recent quarter. That's versus $520 million. Wow. At the same quarter last year. Net charge-offs up considerably. Okay. So Bank of America, not too crazy in regards to that, baby. I want to go to Goldman Sachs. There we go. Alrighty. Goldman Sachs. I need to see year-over-year numbers. I don't know why some of these companies make it harder on you just to see the numbers. Like, just show me the income statement right off the bat. Like, you don't have to sell me a dream. Just show me the numbers, okay? Okay, here we go. So, investment banking came in roughly in line with the same quarter last year. Investment management was up, actually, on a year-over-year basis. Okay, so this is what I like to compare it to. I like to compare year-over-year numbers, not on a sequential basis. Okay, so these are numbers I'm paying attention to. So investment banking up 1%. Investment management up 6%. That's impressive. Commissions and fees were down quite a bit. That was down 11%. Market making up 7%. Other principal transactions down 1%. That's a small segment for them. So total non-interest revenues were up 3% for the company. Ooh, non-interest income down 24%. The interest expense jumped substantially year over year. Wow, okay. That's crazy. Their interest expense jumped 157%. So the interest income jumped 114%. But man, that interest expense, geez, what a jump there. Holy smokes. Net earnings, wow, net earnings down substantially for the company, down 33%. Pre-tax earnings down 27%. Those operating expenses killed them. 18% rise. Yeah, I mean, if your non-interest revenues are only up 3% and your total operating expenses are up 18%, it's going to mean not good situation for your bottom line. Goldman Sachs has some issues. I know they're trying to get out of some businesses. What is it called? Green Sky and things like that. And that's causing some one-time problems in regards to their numbers. But no bueno. No bueno in regards to that. No bueno. All right, so let's take a peek at how everything closed out here today. Wow, Avant got hit right at the end of the trading day. That one was doing fine, and then all of a sudden, boom, got hit right at the end of the trading day. Fubo obviously was a big winner. Chicken dinner. Elf as well. Cheesecake. Mattel had a surprisingly green day. That one doesn't usually do well. Recently, at least. There's like been no hype since the Barbie movie came out after that, right? Amazon actually finished red here today. Interesting. Okay. Let's take a peek at Kathy Wood watch list here. The PP was red. Okay. Commodities I care about. Where did we finish out here? GSG is about flat on the day. Okay. Not the end of the world. Housing stocks. How did these babies do? Ooh, Redfin. Could Redfin go bankrupt, folks? Could Redfin go bankrupt? Wow. We'll see. It's not looking good for them. I can tell you that. Interesting. Rest of the housing stocks, not much going on there today for the most part. Whirlpool was a big winner chicken dinner here today. Take a look at big tech. So big tech, Nvidia obviously was a big hit, obviously because of the China news, which we talked about during the live stream. So Netflix continues to get hit, man. Netflix recently, look at the drop in Netflix just recently. I mean, talk about a drop. This baby was, $477. It's $355 today. Even if you go back here to early September, the stock was, almost $450 a share. It's now $355. That's quite a substantial drop for Netflix. There's got to be things going on behind the scenes right now in Netflix that aren't good. I don't know what it is, but there's no way that stock would be making these sorts of moves down without there being problems, right? There's something going on there. Maybe there's talk about them trying to get into live sports. This company's consistently shut that down over time. But I did see something about they are going to host some sort of live event that's at the Wynn golf course that's going to have F1 drivers basically playing golf at the Wynn golf course. I believe it's a week before the F1 race. Now, that's kind of like a silly live event, right? F1 racers playing golf at the Wynn. But it is going to be a live event they're going to host. And so the thought process is this could be Netflix, creeping into, we're going to get into live sports. And a lot of people do not want Netflix to get into live sports because it is extremely costly. I mean, extremely costly. And to have that pay off, it might take years. And look what Amazon's Prime Thursday Night Football numbers have not been good, folks. And so a lot of people are like, if it's going to be paying for exclusive content of sports, it's going to be extremely costly to the company. And I don't know. So we'll see what happens with that, folks. But I know a lot of people aren't too happy about all that.
Of this, though, the fact that the federal government is operating on a continuing resolution that expires November 17th, still no elected Speaker of the House with the failed Jim Jordan vote just earlier this afternoon. Now, if we were to see an extended CR, that would restrict the Pentagon's ability to order new weapons or backfill stocks. New programs can't be awarded either. So there are a lot of cross currents here looking at...
see, somebody just was able to subscribe with Prime. Yeah, from my understanding, you get a free subscription if you got a Prime membership. So I don't know how to do it, but I can clearly see there's been a few people that have done it. So
Roger, it's good to have you on today. I do want to start with more broadly what we're seeing in terms of this geopolitical landscape. You were actually in Israel. You were in Tel Aviv last week when we saw this conflict begin. Walk me through the implications of what we're seeing right now and how all of this could potentially play out. So far, it seems relatively contained between Hamas and Israel, but how acute is the risk that this becomes a broader conflict?
Somebody asked, how's her makeup today? I only comment on Cam's makeup, okay? Cam is the one I comment on her makeup, although I'll say she did pretty good.
We will come back to him once we get that audio sorted, but I think we have another report tied to national security to discuss as well.
Lots of news today. Chip stocks also getting hit hard today after the U.S. outlined new restrictions about exporting AI chips to China. Our Christina Partsinevelos joins us now with that story. Hey, Christina.
Hi, John. Well, the Commerce Department, like you said, wants to cut off China's AI industry by announcing these new export restrictions today that include even more advanced computing chips and close any shipping loopholes through third-party countries. So that means if you sell an AI chip to China, you're gonna have to let the U.S. government know. Nvidia's AI chips made specifically for China are now restricted. The stock was is off the earlier lows, but still closed almost 5% lower today, even though Nvidia did assure investors they don't expect a near-term meaningful impact. But you have to keep in mind that Nvidia gets 20% of its data center revenues from China. 20%.
I mean, they act like it's not going to still get it to China. It's the thing that cracks me up, okay? Here's how this works, folks. Here's how this works, okay? Nvidia sells a ton of AI chips to some company that is set up in whatever country, okay? Then those guys go ahead and sell the chips. Since it's not blocked in that country, they sell those chips to China, right? It's not super complicated. Like, they're going to figure out a way to do it. And now you have a middleman who gets a bigger markup there and can go ahead and sell those chips into China. Like, at the end of the day, like, stuff's going to get through, man. Like, there's a lot of stuff that's illegal in the United States, and somehow it finds its way into the United States. Isn't that interesting? The bottom line is, you can make stuff illegal. You can make stuff, it can't be sold here. It's going to freaking get through. It's going to get through. It will get over there. That's just the way it goes in regards to that. Before I take off here today, I want to just run through the chat, and then we're going to call it quits on this live stream and get ready for tomorrow's live stream, because tomorrow's live stream is going to be a freaking beast, folks. It's going to be a beast. Tesla earnings on deck. Netflix earnings on deck. Obviously, Tesla, it might be a 2-3 hour live stream tomorrow. It's going to be a freaking animal. Alrighty, so let's see what we got going on here. Somebody said, Jeremy, have you invested in House Hack and why? Just wondering because I have. I've not invested in House Hack. I did talk to Kevin about it when he was first launching it. First off, Kevin's really smart when it comes to real estate. I would never doubt his ability in regards to the real estate industry, but in regards to investing in, I was just having trouble figuring out when I would get a return on investment, if I really could, what they're doing. And I talked to a lot of other individuals in regards to that. It seemed like what he was trying to do was rather difficult, is the best way I can put it. So, I didn't obviously make a move there. Like illegally flipping flapjack machines from China. That's funny. Oh, gosh. That's freaking hilarious. Mega earnings day tomorrow. Yes, absolutely. Oh, yes, it is. Netflix earnings tomorrow as well. Yep, absolutely. It's going to be a busy earnings day tomorrow, but nothing's as crazy as obviously, Tesla, my Tesla. So tomorrow's live stream is going to be crazy. Appreciate you. Much love as always. Thank you so much for being here. Thank you, everybody in the chat. And have a great day. Peace.